Dan Ives of Wedbush remaining bullish on NVIDIA, writing, NVIDIA is the indisputable Rocky Balboa champion of the AI revolution, and that is not changing anytime soon on the chip front. Pleased to say that Dan joins us now. Dan, great to see you.
Great to be here.
Okay, I want to ask about the post, because you had that post of them saying, like, congrats, Google, but we're better. They also responded to Michael Burry's takedown of the depreciation thing. It kind of gives a feeling that, like, NVIDIA cares about the fact that their share price is falling and they're trying to fight back against it. What do you make of this sort of PR push they're doing?
Yeah, so I view it a little differently. Look, I mean, at the end of the day, like, there's one godfather of AI, and that's Jensen. I think Jensen, right now, it's the recognition that they're transparent. In other words, like, NVIDIA is not trying to hide anything. They're ultimately saying, like, hey, we are out there front and center, and it just comes down to demand and supply is 12-1 for their chips. I mean, I saw that being in Asia for the last 3 weeks. So them congratulating Google, AMD, and others that are going to be successful, it continues to be NVIDIA's world, and everyone else is paying rent. But the reality is that they are not going to sit there and hide behind some PR when it comes to, whether it's Burry or anyone else calling it a bubble. I mean, Jensen's going to be out there front and center because, in my opinion, it continues to only be 10:30 p.m. in that AI party that goes to 4 a.m.
But, this makes me think a lot of Intel back in the day when we were all rushing out to get the 386 and then the 486 and maybe the Pentium, right? But then Apple was like, why are we giving them these margins? Let's make our own chips. And so did everyone else. And now Intel obviously needs a sort of government bailout in the form of a stake purchase. Why isn't NVIDIA vulnerable to the same kind of vertical integration at these, if Meta, if Google, if Amazon all make their own chips, as they are doing?
It's a great point, and I get the comparison. They're 4 years ahead, in my opinion, of really anyone else in the world, including Huawei, right? So it comes down to, like, now will there be a gap narrow? Big tech's going to continue. They're going to go and make their chip. You'll see that they'll vertically have that ecosystem, and that's a great thing. Because the reality right now is like 12-1, demand and supply. In other words, NVIDIA doesn't have enough chips to ultimately meet demand, right, relative to what we see. But it speaks to my point. It's about the second, third, fourth derivatives of AI playing out. You have 3 to 4 trillion that's going to be spent in the next few years. To call this a bubble, it's wrong. As someone like myself that covered tech stocks in the late 90s, it's a 1996 moment, not a 1999 tech bubble moment. That continues to be our view.
How does that 3 to 4 trillion of spending get funded? Famously, Sam Altman was asked on stage a couple of weeks ago how he's going to fund his $1.4 trillion in CapEx plans with only $13 billion in revenue. And he just got so angry that he declined to answer the question, right? I see that, ChatGPT has, right now, I think, they have a $20 charge, right, for the account that I pay double because I have a work and a personal account. But they're not making massive amounts of revenue. 35 million people are signed on, and it could turn out to be like the Friendster or even maybe the MySpace of AI. Where does this revenue come from?
Yeah, well, see, look, today it's still enterprise. When we think about the enterprise, only 3% of companies have gone down the AI path. So when you look and that's just in the US. Globally, that's just actually starting with sovereigns, what we're seeing in Asia. So when I look at OpenAI, I view it as, it's not just going to be a ChatGPT. It's about what that's going to be on the enterprise, consumer. The consumer applications haven't even started relative to
But it has
Apple
to come quick, right? I mean, remember when the .com bubble burst, it took years and years to make up the revenue that we needed to pay for the fiber outlay in the beginning.
Yeah, and I think for OpenAI, for every dollar that they're spending in terms of the stakes that they're taking, they're just like NVIDIA, they'll get $12, $15, $20 back in terms of revenue.
If we're, though, talking about who wins the enterprise race, I mean, wouldn't that be Google, though? They already have relationships with 40,000 companies. And then when it comes to consumers, They know that name so much better. I mean, increasingly, obviously, they know about OpenAI and Sam Altman and ChatGPT, but especially with that enterprise relationship, who's to say that OpenAI wins out on that horse race?
Look, I think there's going to be many winners, right? I mean, from NVIDIA on the chip side, when you talk about Microsoft, where they stay on the hyperscale, Oracle, and I think that stock's been, way oversold here. But look, the reality is, you go back earlier this year, the New York City cab driver was bearish on Google. Now look at it, because it's my view, it's not just on enterprise with GCP, with Google Cloud, with what's happening on chips along with Broadcom, but also, you look out, they're going to ultimately have that Apple deal. I mean, Apple is going to have to bet on Gemini as their AI partnership, which is another benefit here. So I think it just speaks to our view is that, it's not just about NVIDIA. And I believe NVIDIA ultimately is a stock that goes much higher here, 225, 250. But it's about the second, third, fourth derivatives playing out across, I think the world. And for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
So NVIDIA at the lowest in the month, is this just like the most incredible buying opportunity that we're going to see for this company?
Every time this sells off, you own it, because it's my view, it's $5 trillion and ultimately it's $6 trillion. Because look, there's only one godfather, right? And that's Jensen. And there's one chip in the world fueling the AI revolution. And that continues to be NVIDIA. There will be other, like anytime if there's a DeepSeek moment, you'll have Google TPU. There's going to be other things that happen, but nothing is going to get what I view as really this Rocky Balboa of the AI revolution, which is, Jensen and NVIDIA.
You must have.
It probably wouldn't be Bitcoin leading, but AI. I guess we got to be more specific in terms of AI, or do you think that the full leadership of the first half of this year, where the OpenAI orbit and everything else can participate?
Yeah. Well, I know stocks have been sort of trading pole position, NVIDIA and Alphabet, but to me, the bigger story arc remains that AI is a mega trend. There's a lot of resources and spending, and it's a big contributor to growth. And we know there's a shortage of both power and silicon. So I do think it's going to ultimately move in the next 12 months kind of as one cohort. I don't think valuation sensitivity is as important as people think. We're actually studying this now. We're going to be publishing it soon. But if you look back 10 years ago, the most expensive stocks at the end of 2015 continue to be the best stocks over the next 5 years.
And now Alphabet's up, NVIDIA flat this week as investors latch on to the idea that it's not just Google's AI models catching up, but it's AI chips too. That coming after a report that Google might sell its specialized AI chips, TPUs, to Meta for its AI needs, but there might be a lot less to this Google chip deal than meets the eye if it happens. For more, let's bring in Ben Bajarin, CEO of Creative Strategies. Hey, Ben, good to see you. Happy Thanksgiving. Google's chips are potentially useful to Meta because they could be customized for massive AI tasks in a specific cloud, like, say, video recommendations and Reels, say. But most companies don't have AI needs at that scale, and they want to work across multiple different clouds. So is Google really competing with NVIDIA?
Yeah, I would say no. I think we got to remember, right, the first customer for TPUs is primarily Google, right? They've built those for their services, everything from YouTube to search to Gemini, as we see today, and it runs very, very well on that as a specialized platform. And you're right, Meta, maybe a couple of other names. You're seeing this around Anthropic, right, who's going to do a deal and is trained and run on TPUs, but really, the architecture or the architectural compatibility with GPU is much more programmable, much more flexible across the stack, is still why we see a lot of public workloads, so third-party customers workloads. And remember, right, Google in GCP has a lot of NVIDIA as well that they will continue to need to offer their customers. So really not competitive in the chip sense, but obviously, right, they are running a whole host of software on their own chips, and that's, worth noting for what it is.
Here's my metaphor that I want to run by you, since we were making bull puns earlier. It's like if Google's supplying a specially raised beef cow to McDonald's for the quarter pounder, and McDonald's has its own ranches because it sells billions of burgers. That doesn't mean steakhouses and everybody else is going to buy the same cow, because they want to have different options, local butchers that they're going to buy from, or at least a standard type of beef, and that's more what NVIDIA sells, right?
Yeah, no, absolutely. And I think, again, right, just the general purpose natures of GPUs in this, I think, just lend themselves to architectural compatibility across clouds, right? And don't, forget, right, NVIDIA has the largest install base by a large factor of GPUs. This matters, right, to software developers. So you're absolutely right. The specialized nature of things like TPUs or other custom ASICs are great when that software is highly optimized for it. And that's why you see first parties use it more than third parties. And the question will be, will third parties in public cloud start to adopt these more than they do NVIDIA GPUs? And that's not a dynamic we see today.
Now, at the same time, this does fall into the same bucket as Amazon AWS having its Trainium and Inferentia chips. Inferentia much more relevant now that there are more inference workloads running on these models that have already been trained and figured out. How are you modeling how much those cloud providers are going to save in AI from their own chips and how much market share that's going to keep away from NVIDIA?
Yeah, I think a lot of it comes down to how much of their own workloads they'll optimize. I mean, the way I look at this too is Google is the most successful at this custom ASIC strategy when it comes to an AI accelerator. I think what Trainium has done, and to some degree Inferentia, but I think this aligns around Trainium as a multi-purpose chip going forward, has been great, but again, failed to acquire third-party customers, which is what you need, right, at scale. So there's a lot of reasons why this makes sense to run your workloads on. How much that takes away from NVIDIA, I'm not sure. But at the end of the day, right, we're in what I'm now calling a gigacycle of this industry, one of the largest dollar TAM expansions we've ever seen. There's so much money to go around if you believe numbers like $700 billion or $1 trillion in 2030. And right now, it seems like NVIDIA is going to have the vast majority of that.
So, Ben, is there an VMware type play that's going to emerge across these different clouds? Once we have, Rainier on AWS, that's maybe specifically good at Anthropic, but you also want to run Anthropic somewhere else. Does there need to be an AI middleware type layer so that you can actually get the financial benefit of efficiency on a given cloud, but also get the programming benefit of not having to write special to each one?
Yeah, absolutely. And I do think a lot of people talk about this, especially if you talk to all of the cloud vendors, right? They're trying to say, we want to optimize this stack so you don't have to make this massive lift and shift for your software. You can just run it wherever you want. That's just not where we're at today, but 100%, especially because I think multi-cloud, multi-AI cloud deployments are going to be a thing across enterprises, meaning that they're going to want to put portions of those workloads everywhere. They don't want to custom tune all these things. They want one standard programming language or one optimization set, and then have the options to run that whatever is best for them, whether that's speed or economics or performance or something like that. So I think someday we'll get there, but we're still what feels like a long way off from that reality.
We're seeing this sort of rethink of AI, a rethink of AI spend, and therefore a rethink of who is leadership in big cap technology.
Yeah, and if you had said to me, we play this game, if you had said to me, NVIDIA is going to be underperforming where the rest of these things would be like, well, it's got to be dragging the rest of the market down with it, but it's not. I mean, the S&P's done this without NVIDIA. I mean, NVIDIA's been sort of meandering here at this sort of 180 level for quite some time, and quite frankly, it feels vulnerable to the downside, yet the broader market continues to grind higher. It's very impressive, and again, the fact that we traded down to those levels when we did and held it and defended it and it bounced the way we are, even I have to admit that's extraordinarily impressive.
I felt that NVIDIA, at 85% market share, it's a positive if that sells off and the others rally. The hyperscalers are creating their own chips. Not everyone needs the chip that NVIDIA creates. Some are basic needs. You have things that are just basically searching the web. You have things that really need inference. So I don't think that NVIDIA is on the top of the hill for long, but it's outlasted what I thought it would be able to run to.
But how about from this point on?
Yeah, I think the others do better than NVIDIA. I think Meta, Microsoft, the obvious ones do better. I think Amazon does better. So I think NVIDIA loses, they win.
Mike, do you agree in terms of the churn within big cap technology, the reordering of the AI hierarchy, if you will?
Well, I think it was a couple of weeks ago. It was my final trade. I mentioned Alphabet. We bought it on that dip the following Friday, and we sold NVIDIA the day after earnings. It's been a good run, but that was some relative weakness. It looks like that's not. I mean, what are we down like 1.5%, 2% from where we sold it? But I agree with Steve that I think that you want to actually see it broaden out a little bit. And you don't need NVIDIA to carry the whole market by itself. I think that's kind of what this week illustrated.
All right, I hope you're all doing great today. Today, the information is reporting that Chinese regulators have blocked ByteDance from using NVIDIA chips in new data centers. I'm always hesitant to believe anything the information reports having to do with NVIDIA rumors given their track record, but I'm bringing it to your attention so that you're aware of it. Even if this story is true, it doesn't really change anything for NVIDIA as they are already restricted from selling in China. The good news is that NVIDIA has removed all China revenue from their forecasts, and NVIDIA's business is accelerating even without having any exposure to China. Now, I want to revisit the NVIDIA GPU and Google TPU discussion in case you've missed recent videos, because that appears to be what's on the forefront of many investors' minds right now. I don't view the success of Gemini 3 or the success of Google's TPUs as being detrimental to NVIDIA anytime soon. I'm also not bearish on Google at all. There's plenty of room in this market for multiple companies to succeed as there is such strong demand. Let me ask you a few questions. Is the world still compute constrained? It absolutely is. Will NVIDIA sell whatever they can produce in 2026? They most likely will. Will NVIDIA sell whatever they can produce in 2027? They most likely will. The reality is that companies today, including companies like Meta, simply cannot get enough compute. The world is severely compute constrained in the face of very strong AI demand. Let me ask you another question. Will the total addressable market grow over the next 5 years? The answer to that question is almost certainly yes. And so if the total addressable market is going to grow larger and the world continues to be compute constrained, then there's plenty of room in this market for companies like NVIDIA, AMD, Broadcom, and others to all succeed as there is such strong demand. I'll briefly revisit the topic of GPUs versus custom ASICs in case someone isn't familiar with what's going on here. To give an analogy, you could think of an NVIDIA GPU as a Swiss Army knife. It's very versatile across a wide range of tasks, while at the same time, it is not the absolute best option for certain tasks. On the other hand, you could think of a custom ASIC, such as Google's TPU, like a scalpel. It's not versatile, but it is highly efficient at the specific workloads it has been optimized for. And notice that there are use cases for both. As I've said in the past, Google is a great example of a company that uses both their own custom ASICs and NVIDIA's latest systems. Even though Google uses their own TPUs for their internal workloads, they also continue to invest heavily in NVIDIA's latest systems to then offer that capacity to their cloud customers. NVIDIA systems are a great option for cloud providers because they're versatile across a wide range of tasks, allowing cloud service providers to serve a wide variety of customers. All of that to say that I don't view the success of Google's Gemini 3 or the potential for Meta to start using Google TPUs as a major deal breaker for NVIDIA. There is plenty of room in this market for multiple companies to succeed, and that will most likely be the case for some time. Given all of the criticism of NVIDIA and the AI ecosystem this week from well-known short sellers, I want to remind you that while there may be some similarities between this AI revolution and the dot-com era, there are also major fundamental differences in multiple key areas. First, the largest spenders in this AI revolution have the deepest corporate balance sheets on the planet. Second, the largest spenders in this AI revolution are very profitable, and they're primarily funding their AI investments by means of their own cash flows. That was not the case during the dot-com bubble. Also, I don't view the hyperscalers using debt as anything to be concerned about right now, because they're simply using some debt to speed up their AI build-out. The question to ask is, can these companies afford to pay their debt? The answer to that question is absolutely yes, and so it's nothing to be concerned about right now. A third difference between this AI revolution and the dot-com bubble is that the largest spenders in this AI revolution are not aimlessly investing in AI infrastructure in the hopes of eventually finding a use for it. They already have multiple uses for it, and they're investing heavily in an attempt to meet extremely strong demand from their paying customers. There's real demand here. In the most recent earnings season, Microsoft told us they had nearly $400 billion in backlog, and Amazon told us they had $200 billion in backlog at the end of Q3 with multiple large unannounced deals on top of that. Those are orders on the books that these companies have to deliver to their paying customers. And fourth, new use case development and mass public adoption of the technology is going to happen much faster than it did during the early days of the internet, because the internet is already here, making new use case development and mass adoption of the technology immediately possible. We don't have to wait 10 years for it to happen. It's happening right now. This drastically reduces the risks of long digestion periods and overbuilds of capacity like what we saw in the early days of the internet. And that brings me to my final point on this topic. Gavin Baker made a great point recently at an event hosted by Andreessen Horowitz, where he said that during the peak of the dot-com bubble, 97% of the fiber that had been laid was dark. Today, there are no dark GPUs. Every GPU is spoken for as the world is severely compute constrained in the face of very strong AI demand. And that is one of the key reasons why I think Burry's analysis regarding GPU depreciation is incorrect. I disagree with the premise that the hyperscalers are understating depreciation in order to artificially boost earnings. Rather, I think the hyperscalers have simply come to the realization that the useful life of the hardware is longer than what they originally anticipated due to two factors: NVIDIA's continuous improvements of older generation hardware through software, and second, the world is severely compute constrained in the face of extremely strong AI demand. Since the world is compute constrained, developers will use whatever compute they can get their hands on, including hardware that under normal circumstances would be considered older generation. That extends the useful life of the hardware. There's a reason why NVIDIA, A100s from 6 years ago, are still running at full utilization today. There's a reason why CoreWeave is able to rent out H100 capacity at 95% of the original rental price. It's because the world simply cannot get enough compute to meet the demand, and thereby the useful life of the hardware is extended. This is not a bubble. This is insatiable demand, and this is fundamentally different from the dot-com bubble. Think about this. During the dot-com bubble, we had a surplus of supply and a shortage of demand. Today, we have a shortage of supply in the face of extremely strong demand. It's the complete opposite. Could that change one day if supply eventually catches up to demand and the world is no longer compute constrained? Sure, but I honestly think we are at least a few years away from something like that happening if it happens at all. Jensen appears to agree with this time frame, given his recent commentary. And looking beyond that time frame, we have to consider that new use cases will be developed, and those new use cases will increase the need for compute even further. NVIDIA has multiple very large long-term growth opportunities in front of them, including quantum GPU, supercomputing, and physical AI. I think we will see many new use cases emerge as a result of physical AI. I also think there's a very real possibility that NVIDIA's physical AI business may eventually be larger than their current data center business. There's a reason why I keep talking about NVIDIA's physical AI business, and NVIDIA CFO nailed it on the earnings call when she said that physical AI addresses, quote, a multi-trillion-dollar opportunity and the next leg of growth for NVIDIA. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. This is not getting enough attention, but I think it will get a lot of attention in 2026 and 2027. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack, and this is not getting enough attention. I continue to think that most analysts' long-term NVIDIA estimates are too low given what's ahead. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.